Welcome to today's market report. European stock markets traded lower on Monday, weighed by increased Brexit uncertainty and more coronavirus-inspired lockdowns ahead of key central bank meetings. DAX traded 0.8% lower, CAC 40 fell 1.1%, FTSE 100 dropped 0.3%. The uncertainty surrounding Brexit's trading relationship with the EU in the new year is weighing on equity markets on Monday, amid reports British Prime Minister Boris Johnson is set to pull out of talks within hours. Johnson and European Commission President Ursula von der Leyen are scheduled to hold a call on Monday evening after negotiators were unable to solve differences over fishing rights, fair competition and ways to solve future disputes over the weekend. Both the European and UK parliaments still need to ratify any accord, so time is running short for a deal to be implemented in time. Also weighing, the southern German region of Bavaria announced on Sunday that it will impose a tougher lockdown from Wednesday until early January, meaning people will only be able to leave their homes if they have a good reason. Germany's problems with the second wave of COVID-19 has undoubtedly contributed towards production expectations deteriorating for the coming month. Germany's IFO Institute said its index for production prospects dropped to 5.5 points in November from 16.3 points in October. German industrial production rose 3.2% on the month in October, more than expected, but this could be a high point over the near term. The European Central Bank and the US Federal Reserve are both due to release policy decisions later in the week. The ECB is widely expected to increase its bond buying program to aid the region's economic recovery. Expectations of a US stimulus package are also gathering pace after weak payrolls data last week, following a month of deadlocked negotiations. In corporate news, Italian fashion group Moncler stock rose 1.3% to a new all-time high after announcing the acquisition of smaller rival Stone Island for €1.15 billion. In the UK, retail group Frasers stock fell 2.3% after it confirmed it was in rescue talks for Debenhams U.K. operations. Countrywide stock soared over 18% after rival Connells increased its offer for the UK property group by 30% to 325 pence per share. Oil prices weakened on Monday on concerns the surge in coronavirus cases, mainly in Europe and the US, will result in more lockdowns, hitting demand for the product. The crude futures traded 1.4% lower at $45.61 per barrel. Brent fell 1.2% to $48.65 per barrel. Both benchmarks gained for a fifth consecutive week last week. Gold futures fell 0.5% to $1,831.35 per ounce. On the FX front, Bloomberg, citing a UK official, reported that Brexit talks are likely to conclude today if there is no further progress. With less than 4 weeks left before the Brexit transition period ends on 31st of December, the not-so-optimistic developments continued weighing heavily on British pound. The pair GBP-USD was last seen trading near two-day lows around 133.80 region, down around 0.45% for the day. The pair extended Friday's sharp retracement slide from the 135.40 region, the highest level since April 2018, and witnessed some follow-through selling for the second consecutive session on Monday. If the EU and the UK announce an accord, the pound has room to surge, while markets lean toward optimism and agreement is not fully priced in. Conversely, if talks collapse, there is room for a substantial fall and ongoing contact about an interim deal. A temporary agreement would keep uncertainty and volatility elevated. The first inoculations of the COVID vaccines are due on Tuesday the 8th. The media will be following the distribution of the doses, which require shallow temperatures. Any hiccups in the initial delivery would weigh on the pound and boost the greenback. In the days of following the first inoculations, any reports about side effects could have the same downside effect. Conversely, if anything goes smoothly, GBP-USD has room to rise. With the presidential elections settled, politicians seem more willing to compromise a stimulus bill, but that does not promise a deal. It is essential to remember that Georgia's special elections in early January will determine the Senate's fate. Moreover, Trump may want to inject some measures before signing any bill, potentially causing a delay. The Food and Drugs Administration (FDA) is set to authorize Pfizer's vaccine on Friday. The US regulator is more rigorous than the UK one, and its seal of approval could boost markets and weigh on safe haven dollar. Euro-dollar drops to 3-day lows near 120.80 on Monday, whilst the risk aversion mood supports the demand for the dollar. The dollar index was up 0.3% at 90.993. This is today's market news. Thanks for listening. We'll see you next time.